All right, guys. Welcome back to the channel. It's weekend. We out. I'm together with ARY Banks. I need to show you guys. He's my cameraman today. I need to show you guys who I'm dealing with. It's a criminal, bro. I want to show you guys what his chart looks like. This is what his chart looks like. I don't know, bro. Bro, he's trading. He's trading like trading is what do we call it? Rocket science. Trading is not rocket science, bro. Anyways, it's been a while since I posted on this channel, and I thought I would do more of an educational content this weekend for you guys. And two things came to my mind, right? I want to show you guys, how to take more simplified setups on your trading. How to like find an edge um on the higher time frame, and also how to show you guys, how you could also find an edge on the lower time frame, like 1 minute or 5 minute time frame. So yeah, basically we're out eating right now. Once we're done, we're gonna get on the charts. We're gonna cook. I think I'm going to release the first video. The first video is going to be on the higher time frame bias, how to trade on the higher time frame, and second video is going to come like 2 3 days, maybe 4 days after this first video is posted, basically. And yeah, let's just get.
All right, guys, we just got back. It was a fun day out. Had a tough week last week, so it's good to have a little bit of a cool down. Yeah, let's just get right into business. This model I'm about to show you guys, I learned this model from DAX. DAX is a very, very good and reputable trader. I first came across these models from a lot of traders, but DAX, his own stood out. Like, he had an edge to it, and I was able to read charts and all that, but I lacked the edge. I lacked the execution edge. I didn't know where to execute my trade from. I didn't know the right place to execute my trade from and all that, until I saw DAX until I saw a post that DAX made on his Twitter page, and he was basically just showing nothing too crazy, just how he used his Fibonacci tool on this exact model that I'm showing you guys right now. And basically he showed how he would mark out the high, that's the previous high before the external range high is created, to the previous low right here, before the break. That I'm talking about this high to this low, and how if the internal range liquidity isn't within the 50% or above the 50% range of this what's it called, Fibonacci tool, he's not going to be looking to take the trade. Like, that is not an A+ setup for him. And after I saw that, I studied the whole model and I implemented this as Fibonacci method, and it changed the whole game for me. So I'm going to show you guys how to approach this model from the beginning to the end, and hopefully you guys will learn something from this. So basically, what you want to see, this is an example for a sell setup. So you want to see a high created, and obviously that high needs to engineer this low. I don't know why my PC is slow, but we'll manage. After the low is created, you want to see this high that was created. you want to see it taken out, that's maybe swept, right? So after the high is created, it becomes a protected high. Why is it a protected high? Wherever we encounter liquidity sweeps, chances that the market is going to come and take out that liquidity sweep is very, very low. So whenever you see something like this occur, markets create a high and then comes back to create a new high, and immediately displaces towards the downside to maybe break the previous low. Now we have the sweep of the previous high, and then we have the break of the market structure right here, right? The next thing you are going to look for is an inducement to occur within the range of the previous high and the previous low. So when you have the inducements right here, this is going to be considered the inducement. You look for the market to either break this low right here, or not even break the low. It doesn't really matter, either way works. So let's just say, for me, I really love to see the break, to be honest. So this is like my ultimate A+ setup I'm trying to show you guys. So the low got broken, and then what would you expect the market to do? You expect the market to come and induce this internal range liquidity, right? So markets to induce this internal range liquidity tap into the order block or the POI, which is this initial previous high that we had. So market to tap into that place, and then this is where you want to have your entry. So let me just mark everything out for you guys. So now this right here, your POI, am I right? This right here, your inducement, right? Let me fix this real quick. So, and this right here, your protected high, so that's basically where the stop loss is going to be. And this right here, basically the sell side liquidity, am I right? So basically you're going to look to take your entry right here. Your stop loss just slightly above the protected high. Take profits basically as the sell side liquidity. So this is basically what your sell setup should look like. This right here is basically my A+ setup. A high created, swept, displacement towards the downside, breaking the previous low, internal range liquidity created, market breaks the previous low that engineered the internal range liquidity, and market trades back up towards induce this liquidity and tap into this point of interest, and from there we write down easy. This is like a very, very good setup for me. For me, out of like 10 trades, I don't know, I usually don't even expect losses on this type of setups, but out of 10 trades I would like see I get 7 wins and all that. This model I usually trade it on the 4-hour time frame. Eventually I found an edge around it, which I will show you guys in the later videos. But yeah, basically this is what the setup looks like. And yeah, about the Fibonacci tool I told you guys, if you want to, for you to be fully interested in this setup, you need to mark what the initial high to the low right here. Once you mark that out, you look at your internal range liquidity. If your internal range liquidity is within the 50% or above the 50% range of the high and low, this is a very, very good and perfect sell setup for you. And I'm going to show you guys examples on the charts. Let's get right into that. All right, so this is our first example. This is the GBP JPY chart, the 4-hour time frame. Before I do anything on this chart, I just want you guys to pause the video, just take a look at this chart and visualize your markups based on the model I showed you guys. Visualize your markups. Do you pause it? I'm sure you didn't pause it. So yeah, so GBP JPY 4-hour time frame, I actually took this trade. Maybe I'll put a screenshot somewhere on the screen. Sent it to the community. Look at this. So we have a previous side. One might take this. It's all good, to be honest. Anyone of the two you take, but I took this one. This is our previous high, and this is where it got swept. So yeah, right here, the high got swept. Okay, so after the high got taken out, here's a shift of structure. That's the low. So after this low, what next? The inducements, right? So look at this guys. You take this high or this high, right? You take the high to the low right here. Sorry, I don't know why this chart is lagging, to be honest. It's annoying. Look at this. The internal range liquidity formed what? Above the 50% range. Am I right? So that means this is a good, very, very good sell setup. And what? Look at this. The point of interest. Am I right? Mark that out. So our point of interest right there, the high, mark that out. Our sell side liquidity, I don't know, was it here that I was planning to take profit the other time? Yeah, let's take this as our sell side liquidity. Yeah, and this is like a very, very good entry, guys. Sniper entry. Look at this. Stop loss slightly above the high. Take profit at sell side liquidity. This was a very, very good trade. So yeah, basically, you see, this exact model is the reflection of that setup I sent. Is a reflection of the model that I showed you guys earlier on. So yeah, let's look at more examples to get familiar with the whole thing. And another trick I want to show you guys. When you want to catch a very, very good high setup trade, right? When markets creates, let's say on a bearish market, when markets create a low like this and proceeds to create a high like this, and then the markets create another low right here. You want the market to actually take out this high right here before it dumps. It's a basic ABC model of, I don't know, one of these traders on Twitter. Yeah, so I think this should be the A, B, C, I don't know, but yeah, you always want a high that was created to be taken out. This is basically your internal range liquidity. You want it to be taken out before you take the sell. This is basically what happened here. Dump, internal range liquidity, dump again, it gets taken out, market dumps. Easy. Let's look at another setup. All right, this right here on the flip side, this is a buy setup. So this is GBP NZD. I don't know, I think, okay, I didn't take this trade. I saw the setup, but I didn't take the trade, unfortunately. But yeah, I will show you guys how it played out anyways. So the same thing, we have the low right here, and we have the break right here. So basically the low got taken out. After it got taken out, markets shifted structure, right? And market shifted structure. We have our internal range liquidity right here. Do we need to use our FIB tool? When you are used to a models like this, you don't even need your FIB tools, but for the sake of education, let's use the FIB tool. And you see that since it's a buy setup, we are not going to look for the market to go above 50%. We are going to look for the market to come below 50% to form our internal range liquidity, and this is exactly what the market did right here. It came below it came below the 50% of the FIB tool, which is this blue line right here that you guys are seeing. This blue line below the 50% created the internal range liquidity, pushed up. Now we have a trade that we're interested in, right? So mark our point of interest right here. So our point of interest, and basically, as always, you say Bismillah and buy, right? Stop loss, slightly below these lows. Take profits, the buy side liquidity, 3R. Very, very good trade. DAX took this trade, I think. Yeah, I think DAX took this trade. Yeah, so this is another very, very good example. So yeah, I think the video is dragging too long, so I'm just going to keep it short. There are a lot more examples that we can showcase, but here's something for you guys. To take away. I marked out similar setups like this for the trades that I'm looking for within the next week, and I'm going to send it in my Telegram. I'm going to send these trades in my Telegram community. I'll drop the link in the description. This is one of the trades. Just going to show you guys quickly. Yeah, this is AUD USD. It's already playing out. I marked out all these lows because I love marking out zones. Basically, this is AUD USD. I took a more defined entry on the lower time frame. We'll talk about that in another video. Yeah, but basically this AUD USD, looking for the sell setup from this, what's it called, POI. This was the initial POI but I was not very confident due to, you see, when you are used to something, when you have an edge around a specific model, you would know how to take the trade precisely. If I had taken the trade from this POI, I would have been floating in loss right now. Obviously stop loss would have been up here. First stop loss would have been very, very huge, and I wouldn't have gotten a good risk reward ratio. So I decided to use this supply zone as my POI, because I was not very confident with this POI, and then market came to the supply zone and started dumping, which I took the trade. Yeah, that's AUD USD. This is CAD JPY. CAD JPY. Yeah, I also took a precise entry on this one, which eventually hit SL. But I'm looking to take another trade again if I see a good shift on Monday, because we have not gotten to this high yet, and I have a good feeling about the Monday market. If we invalidate this high, that won't be a good trade. So far I think we have this Euro AUD. We have this Euro AUD buy setup, very, very clean too. Show you guys the markouts, Fibonacci markouts, the high to the low. You can see that the inducement was created below the range, right? So very good setup. Do I have more? I think I have more. I should have more. Yeah, I have more. So this is another setup. This is NZD-USD. It's still very far from entry, but I think this is at exact 50% of the range. Still decide to take the trade. I don't know, when the market gets there we'll decide, but yeah, basically this is my A+ model, guys. And yeah, see you in the next video. Yeah, actually in the next video I'm going to teach you guys how to define these entries on the lower time frame. Maybe I'm going to teach you guys how to trade on the lower time frame first, how to take advantage of the lower time frame. Then we'll do a whole top-down situation of taking my A+ setup on the lower time frames, because this is how I trade now. I see the model on the 4-hour time frame. When markets get to my point of interest, I scale down to the 5-minute time frame, wait for my session window. This I learned from Waqar Asim. Wait for my session window to open. That's New York, or what's it called, London session. Wait for a valid shift, a valid structural shift on the 5-minute to the 1-minute time frame. Take it, very, very minimal stop loss and a high risk to reward. My trade management, basically I take partials at 3 hour, let the rest run to take profit, which is usually between 9 to 12 hour. Shout out Waqar Asim. He's a very, very awesome trader. Yeah, see you in the next one, guys.